Hello, good morning. This is another video with Trade with Steven. I'm here to journal on how to catch missed entries. So I had a sell trade at first on GBP USD. So many people, so many traders, they get paranoid. Let me put it like that. Whenever they miss an entry, but I'm here to show you how to re-enter a trade, most especially when you have a missed entry. Let's go to GBP USD. So yes, I had a sell here, a sell view here on GBP. I had a sell view here. That was the liquidity that price swept. So I had a sell view here, but I missed it. I missed it. Actually, I missed the sell. So how did I get another entry? And when it comes to making a re-entry, your TP should be at least below recent low. Look at it. Yes, below recent low. So I'll also show you I did the same thing in Euro USD. So when price was already coming down, you could see there was no room for retracement. After that came to this first retracement to that made the reversal. So we went to down as low to our 5 minute time frame. You see there's something that they say is when you miss a trade or when you miss a setup, you don't expect to buy at the same point where people have bought before. You're expecting to buy lower at a more lower price. You're expecting to buy low, you're not expecting to buy at the same price people bought before. So or to sell at the same zone that people sold, you're expecting to sell lower or you're expecting to buy higher. So we went down to 5 minute time frame. What was the first thing I did? If you could notice this, let's go to an higher time frame. You see this OB right here have become a failed order block. This buy order block right here, it's become a failed order block. So price broke it, broke the low right here, and this is our major market structure shift. Actually, we've already seen the market structure shift from up here, but since we missed it, we are going to look, okay, fine, price did not react from this order block, this particular buy order block right here, price did not react from it. So then we are now going to look at the same order block that broke this order block, this first buy order block right here. So that's when we went down to our 5 minute time frame. Coming. So went down to 5 minutes. So let me take it to 15. So right here, this is the FVD that at least if price should tap into this by FVD, price should have tapped into it and retraced, but price didn't. Price violated this other block. So that's why you have the rectangle. Yeah, then we marked that zone and then we're expecting a retest into this particular zone, and then that is what happened. But we're not going to trade field OBs. That is one thing that we're not going to do. I'm not going to trade field FVG or field OB zones. What we're going to do is we're going to go to the lower time frame. You see the lower time frame right here. see the lower time frame right here. Where we're going to sell is from this. You could see this major breakup structure right here that we marked. This one, yes. So where we're going to get our sell entry, where I got the sell entry was from right here. So what's about prices? You see, once it comes to order block that broke another order block, that's also a strong zone. So we got this, you could see internal liquidity right here this week. So yes, that's how we did the entry. You could see this other block right here. This will be right here. You could see this internal liquidity. Let me draw it. Internal liquidity right here. So price came straight to the liquidity, and then we had our entry from there. And then one thing about this kind of entry, sometimes you're not going to be expecting a big risk to reward ratio. You could do a 1:2 or a 1:3. So your TP target should be the first break of structure, or the first low, or the first high. Since we are going and selling, we're expecting price to break the previous low. So this is the previous low right here. The previous low right here. So at least that could give us a 1:3 risk to reward ratio. Something. I'm not expecting that big TP smash, but me, I was looking forward to a more bigger sale. But whenever you're in this type of trade, you just target the nearest low or the nearest high, and then let me show you USD. Let me show you USD. USD was very clear. Was very clearly. USD was very clear. More clearer than GBP. So we could pick it. We have already seen this other block, right? I missed the sell also. I missed the sell, but we are seeing our market structure shift from here. MSS. Market structure shift from here. So voila, very sold down. Where are we going to expect? And we are seeing this 1 hour fair value gap. This will be right here. We're seeing this 1 hour fair value gap. So what are we going to do? Went down to as low as, because of that period I wanted to make a nice entry, so we mitigated it to 5 minutes time frame. Because of the main move have already happened and we've missed it, so we need to look for at least some lower time frame PDRAs. We are looking for some lower time frame order blocks, so lower time frame fair value gap. So yes, this is what we have here. I went down to as well as 5 minute time frame. Took out a 5 minute time frame right here. You could see it. So then we could spot the order block, the lower time frame order block. We could see this is the first break of structure. This is the first break of structure right here. So within a 5 minute time frame, we could see that price has already retested it this week. This week right here has already retested that break of structure. So that's already retested it. So we're not going to be looking for an entry more higher. We're going to be looking for a entry lower. We're going to be looking for an entry lower. So this is it, and boom. So we have this 5 minute order block, we have the fair value gap right here. We filled it in. You have your entry at this fair value gap week right here. Yes, we have the entry here, and then we could see price come, tap into it, tap into our entry. But we'll be using a lower time frame when we've missed already the first move. Once we've missed the first move, we'll go down to a lower time frame. Using another higher time frame, you're going to wait for like the next week. But when you know that you want to catch up with that move that moment, go to a lower time frame, look for zones like where market structure shift, lower time frame order block, or an order block that led to a break of structure or a market structure shift. Yes, just look for flip zone, key flip zones. So then boom, we got the sell, and then our TP should be below previous low, because market could come to retest higher time frame zone again. So for us not to miss out of it, we've gotten the TP below previous low, and then we see price coming to the TP. This is below previous low, and we're seeing it. Market smash the TP. So I'm seeing the market smash the TP. So at least this risk to reward ratio will not be too high. It could be like a 1:2, a 1:3, whereby you're trying to catch up with that particular move when you've missed it already. So this is it, and then voila. I'll be making another video later. So thanks for watching. Please like and subscribe. Thank you.